Here is your market wrap for February 16, 2026. System liquidity opened significantly long at 4.68 trillion naira, a 360.49 billion naira expansion from the previous session. While the CBN's intraday OMO auction exerted mild pressure on funding costs, the open buyback rate remained anchored at 22.5%, whereas the overnight rate saw a marginal 1 basis point uptick to settle at 22.79%. The NTB secondary market traded bullish after the CBN floated 600 billion naira OMO bills, boosting sentiment. Strong demand at the long end compressed yields, with the 4th February NTB closing at 15.6 bid and 15.5 offer. At the auction, 2.04 trillion naira was subscribed and 1.35 trillion naira allotted, while the average benchmark NTB yield eased by 4 basis points to 17.58%. The FGN bond market traded bullish as investors positioned for a potential CBN dovish shift after January inflation fell to 15.1%. Strong mid-curve demand drove yields down about 40 basis points to around 16.45%. However, despite the rally and the DEMO's 800 billion naira February auction announcement, average benchmark yield inched up 2 basis points to 16.01%. The naira remained broadly stable at the NAFEM window, appreciating slightly by 0.46 naira to close at 1,353.2 naira per dollar. Gains extended to the parallel market, where the currency strengthened by 10 naira to settle at 1,390.0 naira dollar. The Nigerian equities market hit a record high as the all-share index surged 4.37% to 190,281.56 points, adding 5.11 trillion naira in value to close at 122.14 trillion naira. The rally was driven by Pencom's revised pension equity limits, softer inflation at 15.1%, and strong earnings, with oil and gas and ICT stocks leading gains. Despite overbought signals, increased pension participation has reinforced market liquidity. What's next? We expect continued buying in the fixed income market, supported by easing inflation and growing expectations of a potential CBN policy shift. Investors are likely to extend duration to lock in attractive yields, keeping downward pressure on mid to long-term rates. Meanwhile, interbank rates should remain range-bound, provided liquidity conditions stay stable. Stay tuned for further updates. Visit our website at www.eradpartners.com for daily market insights.